Well, as we are having folks join, I'll just do my brief intro. Most of you know me. I'm Laurel Mintz. I am the GP at Fabric VC. My story is started out as a corporate M&A attorney. Don't hold that against me. The universe had a totally different plan for me, and my dad got sick. Please mute as you join, or we will mute you. My dad got sick, and I ended up as a interim CEO at the ripe old age of 26, running his stores, the Bassett Furniture brand. You may know that store. How many of you guys know the Bassett brand? It's a big national chain out of North Carolina. It was definitely not my plan at such a young age, but really it's what taught me that I was an entrepreneur. Launched Elevate, my brand, shortly thereafter. A lot of my team is on currently, so thank you for joining me there. Elevate's now been around for 15 plus years and over 300 brands. Over 200 of them have been diverse led, and almost 40% have raised capital. So we kept seeing a startup raise exit model. And about 2 years ago, well, actually back up, because of that model and because of my legal and business background, a lot of the venture funds and private equity funds had been coming to us for years to market them. And about 2 years ago, one of the GPs was like, hey, you need to really think about raising a venture fund. I've never seen someone with better earlier deal flow, who's more committed to diversity, and who can actually control the narrative of success with the marketing side of your bench. And I was like, very flattered, no thank you. I'm running a really good shop here, I'm good. And then I saw the 2% number, which a lot of you know, which is that less than 2% of folks that look like a lot of us in this room get funding. And yet when we do receive funding, we return on average at a 25% higher return rate. And that's when I said, damn it, I can't unsee that. And now I've got to go execute on it. And that's really how Fabric was born. So Fabric is a US seed fund, only investing with a diverse lens in queer, BIPOC, and female-led consumer tech and the future of categories. So we are really excited to be deploying capital into some really fantastic and interesting companies here in the US. We have raised just over 3 million to date. We raised, Mark, another $500,000 this week, actually. Really excited to say that. We've deployed $1 million, and we're off to the races. We're deploying our next cycle in July. So we're here to showcase some of those really cool companies and give you all the money you need and deserve. So with that, we're off to the races. G, how do I give you host access? Tell me how to do that, and I will give it to you gladly.
If you click on me in participants, you should be able to.
Fantastic. All right. GG. I don't know if I can do that. Anyways, everyone's muted. I think we're good. All right. So are any of my board members here? Do you want to unmute, and or any of my LPs want to say hello? We've got some really great sponsors here. I know Mark is here. Mark, you want to say a little something?
I'm just grateful to be here. Very excited to see what the opportunities that we're going to be discussing today. So, and very, very happy to be a part of Fabric VC. So thank you, Laurel.
Awesome. Thank you for being here, Mark. Anyone else want to say hello before we introduce our sponsors? All right. All right. Well, I do want to just say thank you to our board and our advisors. We've got a 12-person venture and advisory board. I really couldn't do this without each and every one of you. All right, Jane made you co-host. There, I found you, because everyone was jumping around. We couldn't do this without our sponsors, Armanino, Catherine Nardone, and Jen McCabe. I know that Jen was not available today. Was Catherine able to join us, G? Do you know?
She might not be here yet, but I think they'll be joining later today.
All right. If she's here, just have her raise up. Are we here?
Hi, Laurel. Yeah, this is Rutger. I'm with Armanino.
Rutger, there you are.
So,
hey.
Yeah, hey, thank you so much. Sorry, I'm not on video. I am actually driving from a nonprofit ceremony we were awarded in LA. So back down to Orange County, but excited to be able to join and look forward to, hearing everyone's pitches and, just thank you for letting us be a part of this.
Well, thank you for participating. As soon as we put the call out to sponsors, Armanino was like, hell yeah, we're in. We are all about supporting you and more importantly, the founders that you have on the pitch days. And just so you all know, we had one of the big fours as our audit and accounting team before, and they really failed us. And Armanino really stepped up to the plate. So really grateful to you all. So thank you, Rucker, for showing up. And next up, we've got Chris. Chris, are you in the room? I don't know if Chris is here today. Chris Thiel with 1227 Coaching Corporation. Chris is another great supporter of us. You'll hear from him on one of our podcasts later on, but we just had such incredible support here at Fabric. So thanks to everyone who showed up and to our board of advisors. So how is it going to go today? We have 6 companies, actually with 5 companies, as I mentioned early on. One of our pitchers had a bit of an emergency and is unable to pitch today, but therein lies an opportunity. So if you are a founder and you have showed up today to listen in, you now have an opportunity. Gigi is on our Fabric team. If you have a deck and you meet our criteria, meaning you are a diverse founder and you represent a company that is consumer tech or in the future of categories, and you have the expertise and feel like you could pitch live today for 10 minutes, you may have an opportunity to do so. So ping Gigi, share your deck with her, and she is going to drop you into our randomizer, and you may be picked to pitch at the very end of today's pitch. There are miracles that happen every day here, folks. So you're going to be given an opportunity to potentially pitch live here today in front of, I think we had like 50 to 60 folks that will be coming in and out of the pitch day today. That includes venture capitalists, individual investors, angels, and other vendors that might even write a check to you. So if you think you've got what it takes to pitch today and you didn't get picked for the pitch day today because I think we had over 60 companies that applied, right, G? It was a huge pool of amazing applicants. Today could be your lucky day. So ping Gigi, give her your slides, let me know if you're interested, and you could be picked to pitch. All right, let me share my screen and we will get into it. We have 5, potentially 6 pitchers happening today. Let me go full screen. All right, everyone take out your phones, please, and scan the feedback form. One of the things we pride ourselves on at Fabric is making sure that you, as the audience, provide real-time feedback. When I decided I was going to do this as a live open forum, because I get to listen to so many incredible companies, I wanted to make sure that this was a really awesome opportunity for you as other founders, other vendors, and other investors to provide real-time feedback to the founders that pitch here today. So first, make sure you introduce yourself by changing your name to your Zoom name and your company name so we know who you are if I call on you to ask questions live post-pitch. Use the chat and share your LinkedIn so people can connect with you offline after the pitch, and scan the feedback form. The founders really rely on you to provide real-time feedback. Mark always asks great questions, but let's give him a run for his money this time around. Let's make sure that we ask really great questions post pitch. So we give the founders 10 minutes to pitch, then they have 10 minutes to ask questions, and then round robin again. So scan the feedback form and away we go. And these are the founders we're going to be talking to today. Jeremy, unfortunately, had an emergency, but these are the other founders that we will be talking to today. Let me close this out so you can see. And it's going to be a really, really exciting conversation today. I actually have personal relationships with quite a few of these folks, and I'm personally really excited to hear them. All right. Any questions, please drop them in the chat. G, did I miss anything?
Nope, I think that's it. Yeah,
I want to make sure I follow directions today. Sometimes I miss things and Gigi gets mad at me.
no, not mad. I dropped in the link to the feedback form there as well, so it's in there. But I'll continue to do so and remind y'all to share your feedback as we go through the pitches. And yeah, please submit the form so that we can give these founders some feedback that they'll be able to take into their next pitch meetings.
Awesome. All right, Kat, are you in the room?
I am. Hi, how are you?
Hi, Kat. It's so nice to see you again. Kat and I have known each other for quite a few years now. One of the things I love about you, Kat, is that you are persistent AF. Like you launched your company and your follow-up is amazing. And it's one of the things that it really takes to be a founder and a female founder, frankly, in this space. And I really respect you so much and what you've built. So the floor is yours. Take it away.
Thank you so much. And I'm excited to pitch here because we make fabrics. So fabric VC and a fabric company. Here we go. So slideshow. Let me see if this works. Hello, hello. So my name is Kat Day. I'm the co-founder and president of Attitude, which stands for, and I'm sorry it's skipping ahead, stands for Eco Attitude. We are fighting climate change with high performance, sustainable textiles. And next slide, once it lets me. Oh, I'll have to use the keys. I'm raising $5 million for 14% of the company. We have 300K left in our $5 million round. We've already raised from some of the top VCs. Ignite Excel Ventures led this round, and they're Palo Alto-based VC focusing on impact, clean beauty, next generation materials, and consumer goods products. We also have other really great investors, Drumbeat Ventures, which is on the board from our previous round. And we do plan to allocate this money towards a variety of projects to help us grow. And so my background is I'm a serial entrepreneur. After I sold my first company, which was named #3 fastest growing company in New York by Crain's New York Business, I was advising a number of different startups and looking for the next big thing that I could help join and scale. And that's how I met Phoebe, who is the founder and CEO of Attitude and also a second-time founder. We met online in 2017. She is a textile expert, and she's been working with some of the largest companies in the world to help them source textiles from Asia. And she had spent 4 years in research and development to develop and commercialize Attitude's patented clean bamboo fabric, which saves 86% of carbon emissions and 99% of water. And she also launched a direct-to-consumer brand that uses this technology to make bedding out of this fabric. And she sent me these sheets in 2017, and this is me in my bed. I fell in love with the product. They were unbelievably soft, temperature regulating, and I really love that they align with my values. So why is this so important to me? I am a mom, I have 2 kids, and I really want to make sure we have a habitable planet for the next generation. So any technology that is not just a breakthrough consumer product, but also seriously saves chemical inputs and CO2 is a big solution for me. And when I joined the company, I learned that the textile industry is the second most polluting industry in the world. It is the second largest consumer of water globally, contributing to droughts, and it contributes 10% of global CO2 emissions, which of course cause climate change. But the silver lining is that regulations are coming, such as the SEC CO2 disclosures that will impact every company in the United States, but also New York Fashion Act, which will mandate big apparel brands that do business in New York, which is every global apparel brand, to reduce their usage of conventional materials such as cotton, leather, and polyester. And we're all probably thinking, cotton, why is that? Well, cotton accounts for 33% of the textile industry and is the dirtiest plant on earth. It emits 220 million tons of CO2 due to the use of fertilizer. And it diverts 250 billion tons of fresh water from farming our food. It's an extremely thirsty crop. And it's linked to human rights violations and child labor. And it's getting more expensive due to climate change. So what does it take for us to be sustainable? Do we all have to wear burlap sacks and sleep in uncomfortable clothing? Well, introducing clean bamboo, which is Attitude's solution. We use bamboo, which is the fastest growing plant on earth that grows completely organically and it reduces CO2 emissions by 38% because it's an amazing carbon sequester. Plus, because it grows completely on rainwater, we are making virtually a waterless product. And we use a patented new way of processing bamboo, unlike all previous ways of processing bamboo into fabrics, because we do not use toxic chemicals. And the resulting material is incredibly comfortable, which is what won me over in the first place. So how does this work? We take organic bamboo, crush it into pulp, and then we use a food grade solvent to dissolve the bamboo pulp and turn it into a cotton ball-like fiber. And this is a closed loop system, which means we recycle water 200 times and recycle the solvent as well, which is completely non-toxic and food grade, where you can put your hands in it and nothing will happen to your hands, which makes this an incredibly unique fiber because it has zero exposure to toxic chemicals in the growing phase as well as in the processing phase. And the resulting materials are not just more sustainable, they're actually all around better fabrics. They're incredibly soft, but also resistant to pilling. They're washable and vegan, they're moisture resistant, and they're efficient in regulating temperature, which is what you want in your apparel as well as your bedding. And we've introduced new ingredients that help to make it antimicrobial, antifungal, and deodorizing, such as organic biochar. Finally, the products are actually more durable than existing solutions. And so our brand has already been successful using this technology. We've generated over $60 million in historical net revenue. We're doing about $8 million right now. And this year, we're anticipating $12 million. But we have shipped 500,000 units to customers in our history. We're loved by celebrities like the whole Bruce Willis, Demi Moore family, who are obsessed and fight over attitude sheets. But other really great celebrities like Lance Armstrong, and I had a whole list, Ed Sheeran, Leonardo DiCaprio, and Calvin Harris are fans as well. And we've won a number of different awards as well. How do we make money? This is our LTV, $357. Our product margins are 84%. And once you include all of the DTC related costs, such as fulfillment and shipping, it's about 66%. So our gross profit LTV is about 235 and it costs us $60 to acquire a user. So we make $175 per customer. And that's a 6x LTV to CAC ratio. We have a super low return rate and nobody returns this virtually because once they sleep on attitude, they cannot go back to sleeping on anything else. Cotton feels like sandpaper in comparison to Attitude's clean bamboo. And with our brand, we have developed several new types of fabrics, not just our signature bedsheet fabric that is so famous, but also other types of fabrics like our waffle, which is great for towels, our linen plus, which is a blend of clean bamboo and hemp, as well as our vegan cashmere. And this is our patent here over on this right side, talking about a process. This has been applied across home goods, apparel, and accessories for the brand. But as of last year, we have decided to expand to B2B as well. We see a greater opportunity to create even more impact in the world by replacing conventional materials for the big users of fabric. And we are already working with the top luxury brands in the world, like Chanel and Kering and Hugo Boss. We just learned that Balenciaga is going to be using 2 of our fabrics in their fall 2025, which is so exciting. And we're now in trials, and these companies are paying us right now for smaller amounts of fabric, but soon to turn into bigger orders for some of these top brands as well. So we're very excited about the potential here. The types of applications range from intimates and footwear to tops and bottoms, as well as non-woven applications such as insulation for outerwear, which we've been doing as well with our fiber for our own comforters, which of course replace polyester. That's really fantastic. And what we've been doing is innovating all across from farm to the finished goods. That creates a lot of traceability that is very valuable. this is how we stack up in terms of savings. And you can see that versus silk, for example, we save 100% of water, 86% of CO2, 98% of toxic chemicals, and 85% of fossil fuels. These are amazing savings, and the impact on the world could be significant. And we plan to do more, even doing textile to textile recycling at some point and owning a farm. We're going to be doing interesting things in the farming phase to make our bamboo grow faster, as well as partnering with farms to utilize their agricultural waste and applying our green chemistry to different sources of cellulose, not just bamboo. We're currently focusing on the textile space, but we have other adjacent spaces we're looking into as well with our technology. We have a great team of veterans from the fashion industry that will help us reach $147 million by 2027. So here's how investors make money. They get $5 million, 10% after dilution, and the exit multiple, yes, thank you so much. We expect a 32x return. Thank you. That was it.
Awesome. Really well done. Amazing. Wow. You've really grown since last time we talked, Kat. You should be so proud of yourself.
Thank you.
We like to open the floor to questions. I've got a ton of questions. Mark obviously always has his hand raised. I want to see if there's any other questions before I call on you, Mark. But make sure you can add questions in the chat, or you can just unmute. This is an open forum. Don't feel shy. This is really why we have this as a conversation, not just us talking at you or at Kat. So please feel free to open the dialogue. All right, Mark, you can start it.
Thank you. Very good. Appreciate that presentation. Two questions, one on model, one on product. On the model, is your model focused 100% on making and selling the fabric, or do you plan on licensing the technologies to some of the big players as part of your business model? And second, on a product basis, one thing I didn't hear that I thought was also important in fabric was breathability. So can you talk to that?
Yes, I'll address the last question first. Our fabric is proven to be 17% more breathable than cotton. So yes, it is very, very breathable. That's why I feel so comfortable and I slept like a baby, and so do many other customers. Your question about the model and whether we're going to be licensing the technology. So in most cases, we're actually going to be selling them finished textiles. In some cases, we'll be selling yarn and partnering with the mills that they work with. So for example, a company like Caring Group has their own mills that they prefer to use. So they've put us in touch with them, and they're the top mills in the world, in which case we partner with them and create the finished textile together. And we come up with a price point for Caring to buy. In some cases, we can also have a royalty fee. But we're being very creative. It's very early in the business right now. So we're learning what model works the best. And I think it will, for now, depend on who we're talking to, because there's a range of customers. There's a very large customers, and there are the smaller kind of customers.
Thank you. And one more question, may I, Laurel?
Of course.
Thank you. So competition. So I have seen a fair amount on bamboo fabrics in the last 12 months or so. I don't know if it's attitude or not, because I don't pay so much to that market. But what does your competition look like, specifically with respect to bamboo fabric products?
So every other bamboo fabric on the market is viscose from bamboo, which is the technology that's been around for more than 30 years. And unfortunately, it uses caustic soda. It's a toxic process. In fact, it is so toxic that it is banned to manufacture viscose from bamboo near urban areas in China, where is the predominant place that they manufacture in. So they have to really put it somewhere far away from large metropolitan areas because of caustic soda that is employed in that process. We have solved that problem where we use a non-toxic green chemistry, a food grade solvent that you can put your hands in, nothing will happen. And so that's the main differentiator. So there have been lots of bamboo products on the market for several decades now. Bamboo t-shirts, bamboo underwear, bamboo bedding, you name it. But also the structure of bamboo viscose fiber is very different versus ours. Ours can have many more applications, which is why we've been able to create these luxury applications that are more silky, but also more like cashmere and wool, things that haven't been able to be done before from plants.
Thank you.
Thanks, Kat. Heather, I don't know if this, you have this question answered already by what you just said, Kat, but Heather did ask, how do you differentiate the brand from other brands that claim to be sustainable, especially organic cotton over bamboo, similar brands such as Quince, Under the Canopy, Made Trade, et cetera? I feel like you kind of touched on that, but if you want to double click on that a little bit more.
Yes, there are a lot of other DTC bedding brands, and some of them do claim to be sustainable. I would say it's really a bit of greenwashing going on right now in the market, and the consumer can be misled by these claims unless they have certifications. So, for example, with organic cotton, I would say that's probably the best option you have, but it's still not as good as our clean bamboo, because ultimately it's still not sustainable. It requires even more water to grow cotton, organic cotton versus conventional cotton, more land because the yields are lower and it is expensive. Other organic or whoever claims to have organic bamboo like Quince, unfortunately, they are making the wrong claim because you cannot say that your finished textile is organic. Well, you have to verify the whole supply chain, which they have not done. They can claim that their feedstock organic, as is ours, because all bamboo is organic. You don't even need a certification. We have a certification, but you actually don't need a certification because bamboo requires no chemical inputs. So there is a bit of confusion in the market, which is why we're doing so much education and impact reports that we release every year. And we're on podcasts talking about sustainability and really being the leader in the education of sustainability for
Basically, Kat, you're calling BS on those brands.
Unfortunately, yes. I mean, they claim all sorts of things, but unless somebody goes out and hits them with a stick, they can continue to do that.
Thanks. Stuart Gill asks if you can share insights on existing B2B contracts, terms, length, size, growth potential, strategic partnerships. I understand some of those are proprietary, but if you could just, whatever you can share that's not under NDA.
Yes. Yeah, absolutely. So B2B is our very new business. It's about 8 months old, and we launched in July of 2023 when we went to Paris to exhibit at Premier Vision, which is the luxury fabric exhibiting like trade show. And that's where we got all of these conversations started. So it's been about 9 months since then, and we're very proud of where our conversations with those brands have advanced. And everyone has told us that, oh my God, we love bamboo, but toxic chemicals and viscose have really kept us away from it. And so we're so excited that this now exists. We've been waiting for this for 10 years. And the types of contracts we have now are really in the sample stage at the moment. So where they're sampling and they're telling us, okay, can you mimic this fabric that we're using in our Body by Victoria, for example? And so we've mimicked the fabric, and it's actually been approved now for a company like Victoria's Secret. So in that case, once it's approved, then they place a PO for usually a small capsule collection because they want to test it out, and then they roll it out to the bigger order, which could be the size of $2 million for us per brand per year.
Got it. Thank you. Heather asks, how do you plan to get the public aware of these sustainability differentiators? I know it's tough, but how do you plan to mass market that so consumers are educated and choose you over others that may appear to provide the same product at a better cost?
Yeah, so for us, it's really about education through content. So we do create a lot of content both on our website, but also through media partners and through podcasts. And a lot of the actually sustainably focused publications get the difference. Also, we're getting a lot more success now with educating editors of like mass market media as well. So they can explain the difference for us, which has been really helpful. But yeah, I think Quince is going to be a problem for most brands because they're literally copying everybody and claiming they have the same thing, but they don't. So I think it's up to the consumer to decide, are they going to be participating in fast fashion like Shein and Quince, or are they not that type of consumer?
Got it. Eli, can you unmute and ask your question? I see you have your hand raised.
Yeah, hi everyone. Hi Kat. Thank you for the presentation. I think we met also at the TriNet pitch, and I really am amazed by the product and great success. But I have a question. You're profitable right now, right?
Yes. Yes,
Okay.
our brand is operating profitably, but we continue to invest cash into our B2B business, so we are burning some.
So my question now that you're profitable, are you selling cheaper than cotton or?
No. So our products are positioned for our brand as eco luxury. So they are more expensive than IKEA cotton brands that you're going to get, but they're actually in the same range as, like a Parachute or organic cotton brands like Kuyuchi and Bow and Branch. This summer, we're actually introducing a brand new line that's going to be in the higher end luxury space, not quite like the Frette of the world, but in the $400 plus, because it will be the first bamboo bedding brand made in Peru. So this is kind of the Pima bamboo line.
It's
And it
So
will
fashionable.
be more
roughly, just
luxury
quickly,
than the
can you
current
provide
one.
us how much more expensive is it than, say, organic cotton?
There are brands that are much more expensive than Attitudes.
Yeah.
So Boll and Branch, for example, is more expensive.
Yeah, we're out of time on questions. Thank you, Eli, and thank you, Kat. Crushed it as usual. You're such a rock star. Thank you. Next
Thank
up,
you.
Shima. Is it Shima or Shima? I want to make sure I'm not butchering your name.
Hi, it's Shima.
Shima, you have the floor.
Okay, great, thank you. Gonna share my screen. Hey, great. Can everyone see my screen? Okay, perfect. So hi, I'm Shima, co-founder and CPO at SafeRate. And today I'm going to talk about how SafeRate is transforming the mortgage industry. So 28 million Americans want to buy a home in the next 12 months using a mortgage loan. They want a low rate, an easy way to get that rate, and a lending partner they can trust to painlessly get them through what will be one of the biggest purchases of their life. But this is what happens when you try to get a personalized rate from today's biggest lender. It takes 25 steps just to get a tailored quote. Want to compare rates between lenders? Complete 20 steps on the nation's largest comparison site, add your social security number and date of birth, and once you click I agree, you've agreed to sell your data to these 2,300 lenders and brokers. To also receive emails, texts, and robocalls from each, and to allow selected partners to run your credit. And oh, you still don't see a personalized rate. Fill out an application with each lender to see their rates. So is that 25 more steps? And if this is the process just to get a quote, how bad is it going to be to get the actual loan? The SafeRate's an AI-powered mortgage broker that gives home buyers what they want: a consistently low rate, an easy way to get that rate, and the unmatched customer experience to take them from wanting a home to owning a home. First, our pricing engine. So it takes 10 seconds for home buyers to get a personalized rate to 1/1000th of a percent with basic information about them and their target property. Second is our AI rate comparison engine, Beat This Rate. It lets home buyers know in under 20 seconds whether we can beat the rate and fees of another lender. So home buyers simply upload a lender's loan estimate or a pre-approval letter, and we tell them, 1, whether we can beat that rate, and 2, what our rate would be if we charged the same upfront fees and points as the lender, and if we didn't. So unlike me, who needs sleep, this service is available 24/7, 365 days a year. And home buyers can start an application directly from the chat. And guess what? We beat our competitors 82% of the time. We don't charge upfront application and underwriting fees, and our rates are on average 50 basis points lower than the nation's largest retail lenders. So our home buyers save an average of $1,600 on interest payments per year, And to date, our home buyers have saved anywhere from $500 to over $12,000 a year. And so what about our process? So our AI homebuyer chatbot is available 24/7 to guide our buyers through the loan process. Home buyers get answers to questions like, what would my rate be if I change from a 30 to a 15-year mortgage loan? Or loan questions like, what happens after we're done with the appraisal? So users can message us to update their application or to request to speak with us in real time. And right now our chat works on our web and mobile apps, and we're expanding to support text messages and WhatsApp. So we're able to give our home buyers the low rates and the unmatched experience because our technology is different from every other lender. So a single unified data schema underlies our chat, web app, and mobile app. And our Gen AI engines work with our pricing engine to give consumers both real-time pricing and answers to their loan questions through our LLM chatbots. And we connect our home buyers directly with rock bottom rates from wholesale lenders to save them money. And so our relationship with United Wholesale Mortgage, which is our wholesale lender, means that we can take home buyers from completing an application to being cleared to close on their loan in as little as 24 hours. And internally, our AI tech stack reduces the time to process a loan from 8 hours down to 2 hours, with a 100x improvement in our core sales tasks of quoting personalized rates and comparing our rates to other lenders. So we've originated $13 million in mortgage loans for 22 borrowers. And as the lender, we make $3,000 per loan after our costs. Now our goal is to originate $100 million in loans by this time next year and $1 billion by 2026. So we're confident we've built the lender that home buyers want to work with. And we're doing the same for our referral partners who are just as important. So real estate agents are the #1 source used by first-time home buyers to choose a lender, with 40% of buyers relying on an agent for a referral. So on SafeRate, real estate agents have tailored searchable profiles to be discovered by home buyers. They can connect with buyers and track the progress of each buyer from initial contact to close. And in today's market, every dollar counts. So interest rates are at a 20-year high, and agent compensation is under heavy scrutiny. And so SafeRate makes agents look good by saving their clients money and time. So we're currently working with 3 Chicago real estate brokerages with a combined annual transaction volume of $300 million. And like home buyers, they also want a single point of contact to keep them informed about the loan status. So our chat supports both buyers' agents, sellers' agents, and the attorneys on the transaction to keep everyone in the loop so the loan closes as quickly as possible. And starting in June, we're going to offer monthly down payment sweepstakes for prospective home buyers. So this engages home buyers even earlier in the process and as a way for real estate agents to convert prospective clients who are not yet ready for a home purchase. And we also have a huge market opportunity ahead of us. So $2 trillion of mortgage loans are expected to refinance in the next 2 years. But for homeowners, it's hard to know when it's a good time to refinance. So we offer an AI notification service that solves this. Homeowners simply share a current mortgage statement and the desired savings, and we check mortgage rates daily to let them know instantly when is the right time for them to refinance. So what we've built has taken a tremendous amount of work. And it actually makes us viscerally angry every time we see a home buyer that's quoted a high rate with junk fees that they don't need to pay. And what fuels us is knowing that every borrower is better off after working with us. So we've saved our buyers an average of $1,600 in interest payments per year relative to the nation's biggest lenders. And when we capture 1% of the market, we will have saved our homeowners $1 billion each year. So I went from building the AI for self-driving tanks to building SafeRate because homeownership changes lives. It's the #1 way American families build long-term, multi-generational wealth and feel secure about their future. And so I've built the AI workflows and the SafeRate user experience to give home buyers the low rates and the pain-free experience that they deserve. And Dylan originates loans, builds our technology, and streamlines our processes. So his passion to change the mortgage lending industry was fueled by witnessing the fallout of the Great Recession and the impact it had on low-income communities. So he's previously served as CTO for a number of startups in Fintech, PropTech, and EdTech, and teaches entrepreneurship and technology at the University of Chicago. So together, we're transforming the mortgage industry, and we hope you'll join us along for the ride.
Thank you. So what are you raising?
Yeah, so we're raising 1.5 million pre-seed.
What valuation?
We're gonna have more conversations to figure that out.
Got it. Okay, questions. Can you give me the screen back, please?
Sure.
First of all, I love that you're tackling this industry because it's a shit show. I think that's a technical term, right? It's a total shit show for most of us out here. And I love that you have come at it from so many different angles. When you were like, we're doing the down payment sweepstakes. As a marketer, I was like, yes. When you're doing the refinance engine, I was like, yes. I mean, there were so many different pieces of it that I was just like very impressed that you have been so thoughtful about attacking. So I just think that your approach to it is really quite smart. So thank you. Mark, go for it.
All right, thank you. Again, great presentation. A couple questions. I missed when you said your earnings per loan, and just talk to me about your profit model and how you're making money on this again, and then also please talk to your competition, direct competition in this space.
Yeah, and so the way we make money, so we're what's called a correspondent lender with United Wholesale Mortgage. So the way we make money is for every loan that we sell to United Wholesale Mortgage, we make about 75 basis points net, so net. And so what happens is, as a total top line, we'd make about 1.5%. And after taking into account our warehouse fees, our underwriting fees, and our processing fees, we net about 75 basis points of the loan amount for each loan. And so for our average loan size of about $400,000, that comes out to $3,000 per loan. And so those are the major costs for the operations. Our technology costs are actually incredibly low, that we can run a mortgage lender at $100 per month effectively for technology costs. And so we're very efficient in that way. And in terms of competition, I think the way we've positioned ourselves is by being directly connected to wholesale mortgage, wholesale lenders, we can offer extremely lower rates than, you know, a Rocket Mortgage or some of the biggest lenders out there. And so what we're doing is highlighting that through our AI engines like Beat This Rate or Refi Me, because we're directly signaling, hey, our rates are going to be lower than yours. I will gladly take a loan estimate from Rocket Mortgage and put it in Beat This Rate, and I'm positive that I'm going to beat it. And so it's a way of actually capturing the market share from these large retailers by signaling that our rates are going to be better, and having built the front end to actually be able to showcase that and help, you know, home buyers effectively and easily be able to compare rates and go through the process.
Okay, a couple of follow-ups then. Will you be just having the United as your only wholesale lender, or will you be connecting and contracting with others? And then distinct question of what is your volume necessary before you're profitable?
Yeah, so what's great about United Wholesale Mortgage is the back-end process that they have. And so they're very reliable in helping us close loans quickly. So and right now we're doing the majority conventional and jumbo loans. It's possible for other types of loans, we'll bring on additional wholesale lenders, you know, for different types of loan products. But right now, United Wholesale Mortgage is, you know, our partner in the process.
What term contract then do you? How solid is your contract with them if they're your sole source for pretty much your entire product?
Oh, what do you mean? How?
So you've got a lender that is pretty much, without them, you don't have a product because you don't have someone to close the loans with. So how strong is your contract with them and your agreement with them?
Yeah, so United Wholesale Mortgage is actually the largest lender in the country. So they originate more loans than Rocket Mortgage. And so they're a very, very big operation. So they have 7,000 underwriters and processors in Detroit. So I think, and they recently went public. So I think, you know, we are confident that they're going to be around relative to some of the other wholesale lenders where we're seeing consolidation. But, you know, and they have great rates. So I mean, we'll look at other wholesale lenders. But, you know, currently we're pretty happy with
I can
that
jump in on that,
relationship,
Mark.
and we know that process well.
Shima, I think the question is how tight is your contract with them? Because if they go away, you don't have any deal flow. I think that's the question, right, Mark?
If they bail on you,
Right.
you know, how is it, you know, so what kind of term contract do you have with them so you know your lending source is secure for the next 10 years, 1 year, 6 months, what?
Yeah, so our deal flow isn't coming from United Wholesale Mortgage, right? So we're getting customers through our real estate agent referrals and through our website. We have we have a warehouse line of credit through First Funding, and then United Wholesale Mortgage just buys the loans from us.
Yeah, I understand that, but they're essentially your supplier, if I were to think of it in a normal supply. Without the supply of their product, you can't fulfill your loans, basically, because they're your only supplier of buying loans currently. So I'm just trying to figure out how secure
Yeah,
is that
and it's
supplier agreement, essentially.
yeah, and in the mortgage world, so it's not like so we got up and running as a correspondent lender with United Wholesale Mortgage in 4 months. And it's a process that we could repeat with another wholesale lender. But you know, they do about I think $300 billion in mortgage volume a year. So as the largest, you know, it's kind of saying what happens if Rocket Mortgage goes away. So there is some risk, but you know, it's the largest retail lender in the country. So, or you know, it's the largest wholesale lender in the country. So it's less of a risk, kind of as we view it.
All right, so let me go past that one then. And then volume for profitability.
Yeah, so in order for us to so our burn rate is very low, it's $30,000 a month. In order for us to break even, we need to do 10 loans a month.
All right, I have some questions as well. Anyone else have some questions? Oh, Sharia. Mark, are you good?
Yeah, I'm good for now.
Awesome. Sharia asks, there have been conversations about the real estate bubble popping. How are you solving for this?
So I think, when you're looking at, what's happening with home prices, what we're really trying to do is make the mortgage as affordable as possible. And I think you're always going to see, household formation, people who want to buy homes. It's not always going to be the best time, right? Rates might be 2% or they might be 8%. And what we can do as a lender is make comparing rates really, really easy. And we can also try to lower that rate as much as possible. And so, that's effectively the two things that we're doing to really help, consumers be able to weather any type of, real estate, trend, whether it's kind of going up or down. We're really just trying to save people as much money as possible.
Got it. Okay, let's see other questions in the general. All right. How are you aggregating the data? I mean, the big sexy conversation obviously is around AI right now. But the engine has to aggregate and you have to feed the engine to aggregate all the data. Can you talk a little bit about that process? Because I'm kind of a Luddite, but it is like this very sexy conversation right now, but I know nothing about it. So I'd love to understand how you're feeding that engine.
Yeah, so we have a lot of data. So we have our pricing engine. So the prices, that we're feeding are, we're ingesting prices from United Wholesale Mortgage every day. We also have data about the loan process. And so where every borrower is in their loan process, how the real estate agents, sellers, attorneys buyers' attorneys, buyers' agents are connected, and the data that they have access to for each transaction. And we also have data from, so in addition to the loan data, we also have data from, Freddie Mac and Fannie Mae, and to be able to answer questions that are coming in. So what we're really doing is taking internal data relevant to our transactions, our borrowers, our partners, and our pricing, and using the OpenAI large language model to really make it be conversational. And so, so we're not going to the outside world and taking, external information from the open web. All we're doing is taking the data, salient to all the transactions we have, and then making target goals in the AI engine and having them, be interactive for our users.
Got it. Thank you. Mark, I know you've got another question, but we have to move on. So thank you. Please add it in the form. As a reminder, we have an open slot for the very last pitch because we had someone that had to drop out due to an emergency. But next up is another amazing female founder, Karima. She and I actually spin together almost every Sunday. I turned her on to, I think the proper term is what we call batshit crazy hot spin, right? But I know it's changed my life and it's changed hers. And I love this brand. It's called Six Golden. Karima, take it away.
There, I got myself off mute. I absolutely love that you said we spin together, that we do. I am so happy to be here today and talk to you about Six Golden. So I'm the founder of Six Golden Skincare, and this is an ultra saturated market, but this is the only skincare with the genius to balance all skin types and tackle signs of aging with one simple routine. So the founders of Six Golden, myself and my partner, Linda, we're beauty industry veterans. We have decades of experience launching, marketing, and driving sales for household brands. We've created successful advertising and branding for Clinique, L'Oreal, Space NK, Estee Lauder, Elizabeth Arden, Harrods, and many more. So after working with every big brand, we saw a white space in this ultra saturated market that wasn't being addressed. So this Six Golden is the culmination of our years of experience tracking what customers actually want and what sets a company apart for acquisition. Okay. So here's the problem we saw over the years. Most skincare solves for very specific skincare issues like dry or oily or aging or sensitive skin, but your skin's needs change daily, and the product you bought to solve one problem is not going to solve the next one that you have. And what we saw again and again was that 90% of people struggle to find a skincare routine that actually works for them, that works consistently. Linda and I both had this problem, even after we were able to try and sample every single skincare product on the market over the past 20 years. So we realized that the way we approach skincare, it needs to be flipped on its head. Instead of solving for specific skincare issues, we needed to solve for the overall health and radiance of everyone's skin. So introducing Six Golden. This is a new kind of routine, again, with the genius to balance all skin types. It's universal, it works for everyone. So whether you have dry skin, oily skin, sensitive skin, these smart formulas auto-correct whatever it's going through and combat signs of aging. So here's the Six Golden lineup. It's quick, it's easy, it's unbelievably versatile. It's one system to balance all skin types. When you look at other brands, they have so many products to choose from. You walk into Sephora and you're hit with just shelves of products, and it's not quick and easy to find exactly what you need. So for example, Beauty Counter has 8 different cleansers, 8 different moisturizers. Which one do you choose? Tatcha has 17 cleansers and 15 moisturizers. That's a totally archaic way of formulating, and it causes choice overload and decision fatigue and confusion. Our customers just want healthy, radiant skin with the maximum benefits and ease in a product lineup. So this is Korean skincare. This is the gold standard for efficacy. We're doctor formulated, we own our IPs, and we own all future IPs that we'll be creating and adding to the line, 4 SKUs a year. We have independently tested our products, and we have excellent results. For instance, the Nourishing Face Oil has emerged as our hero product. 100% say it reduces the look of lines and wrinkles. And it happens to be our best-selling product with our D2C margins of 90%. So overall, our margins are really strong throughout our lineup. We have rave reviews. For these past 2 years, we've been proving out product market fit and getting to know exactly who our customer is. We have 94% five-star reviews on our website. On the independent site, Trustpilot, we have the highest rating you can get of excellent. We've gotten some great press hits so far. Social media impressions, 7 million social media impressions organically. We've paid for 0 advertising or influencers so far. And getting to the market size. So this market is growing with no slowdown in sight. The global clean beauty market in 2022 was estimated at 4.6 billion, expected to reach 16 billion in 2028 with a CAGR of 13%. So our Six Golden projects sales of around 89 million in year 5 by serving a very specific target customer, which we've come to learn over these past 2 years. Our customers are aged 30 to 55, and they have dry skin, oily skin, or signs of aging. It's more of a psychographic as well, it's people who want clean ingredients, who are concerned about what they put on their body and concerned about the legacy of the planet that they're leaving for their children. So looking for sustainable, clean products. So here's where I began. I've been in skincare for 20 years. The market's utterly saturated. So, you might say, why are the world does not need another skincare. I completely 100% agree with that. But what they do need is a different way of doing skincare, which is what we did. The market shows, or here's all the skincare. They're all crowded over here. These and Six Golden is truly, it's the all-in-one skincare that rebalances and renews every skin type, and it's ultra clean too. All these brands over here that are clustered, they solve individual skincare concerns, but that approach is too specific for our ever-changing skincare needs. So that's why still, with so many products on the market, 70% of people wish their skin looked healthier. So something's not working. Our closest competitors are Tatcha and Solwasu, but they were both started over 10 years ago. So we're kind of the new emerging brand that's ultra clean, sustainable, and we use Korean herbal medicine in ways that they don't. They use just some Korean ingredients. All our formulas exceed the EU and US safety standards. That means we've banned over 2,700 ingredients. We're clean to the EU standards. We're certified, as you'd expect for any new brand coming into the market, PETA, Leaping Bunny, 1% for the planet, and plastic negative. So over the past 2 years, we've been proving out product market fit, and now it's time for us to truly grow. So our go-to-market focuses on 3 pillars: brand awareness, D2C growth, and retail expansion. We have gone into our first retail shop, which we're very, very excited about, which is The Well in New York. And just yesterday, we got news that we'll be entering their Auberge Spa, the Mayflower Inn, right now. So now we're in 2 retail homes, but I didn't even get a chance to update our deck yet. In terms of growth, we're going to focus on an omni-channel approach to build the business. We'll be strategically layering in and growing sales channels year on year to target 89 million in sales. Distribution will be held only in the US and Canada, so we can aim for a higher valuation at exit. I'm happy to elaborate on our exit strategy in Q&A if you'd like. We are raising 1 million with a standard safe at a 4 million valuation, and the investors in Beauty Counter and Tory Burch are leading this round. And they also, this is a follow-on investment because they invested in our SPV as well. So thank you very much.
Lovely, thank you. Yeah, I would like for you to expand a little bit on the exit strategy. It's one of the reasons that I invested in the SPV. So I do want to be transparent with the group. I was an early investor in the company, and Karima and I had many conversations about exactly what she said when she came on, which is, I was like, I'm not investing in skincare. It's a saturated market. I don't believe in investing in this category. And then I tried the product and I was like, I will personally invest. I don't know if I'm going to invest from a fabric perspective, but I did actually believe in the model that she presented. So I am personally an investor and I do want to be transparent about that. Can you talk a little bit about the exit strategy? Because that was the other thing
Sure.
that was a convincer for me.
Of course. So we did intentionally build Six Golden to be a long-standing heritage brand, the likes of Clinique or Kiehl's, a brand that's around to serve as many people as possible. So in building the brand, we've taken into every account what heritage brands look for. So we did a deep dive into the 46 heritage brands, into the 46 skincare brands that heritage brands own, the big 8 conglomerates. And not one of those skincare brands is able to have the point of difference that says they're able to auto-adapt for all skin types. And only one of those brands of 46 is as clean as we are, and that's Tata Harper. So we know that we have a point of difference that heritage brands will be looking for, because the things they look for are a strong brand identity. Does it compete with current portfolio brands or fill a gap? Yes, ours does. Could they ramp it up omni-channel? Yes, because we're only keeping sales in the US specifically so they can ramp omni-channel. Does it have global growth potential? 100%. Korean skincare has been and will continue to be the the gold standard for skincare. So it has a chance to scale. Do we have ingredient and product innovation? Yes, we do. We have a doctor who has 9 generations in her lineage of how to specifically formulate with these active botanicals, and we own our IP. Are we transparent and eco-sustainable? They look for that. Yes, we are. And every time we're formulating or ordering new packaging, we're looking at how to ramp up our sustainability. Right now, with our next buy-in, we're going to be 98% plastic free. Now, all these things are important because heritage brands, it's very hard for them to come and retroact all of their brands to be this clean, eco-sustainable, and have a different point of difference. So they buy them in. So we're just setting ourselves up with the things that we know they look for.
Thank you.
Yeah.
Any other questions from the group? Of course. Oh, actually, before I call on you, Mark, Jenny K asks, do you have an influencer GTM strategy? IndieWild also is in the skincare space, does a good job with influence.
We do have I love that question. That's part of our go-to-market strategy, an important one. We see PR, influencer, all of that is a wheel to, getting more brand awareness. We have 2 people set up to work with. We're going to start with working with celebrity makeup artists who organically will post for us. And we have a PR and another woman with contacts. So that's our first point of influencers that we'll be working with.
Very cool. That's strong in the skincare space. Thank you.
Okay, Mark, I'll let you off your leash.
No worries. Anyone else can go first, please. It's just so in this space, is I understand the product first. I want to make sure a clarifying question that the product as you apply it is one product that will work for all these multitude of skins. So you don't have to change the product. It adapts to the person's skin. You don't buy a different bottle. Is that correct?
Correct. We formulated a skincare system. So it's a cleanser, a toner, a vitamin C, a moisturizer, and a face oil. These 5 products are the core system that will work on anyone's skin type to bring it back into balance. And these 5 core products are all anyone needs.
Okay. So following out then, I come from a different industry, medical device primarily, but in an industry where you're very accustomed to a broad-based solution for customers, and there's a lot of value in that. There's also a big challenge. And the big challenge, as I see it, is you're not seen as the specialist, you're seen as the generalist. And so how will you overcome, hey, I've got dark skin that has XYZ, and I want something specific for my skin because it's made for me, as opposed to something that's made for everybody, and maybe it'll work for me, maybe it won't. So how do you expect to overcome that psychological barrier that might exist for folks that want the products that's designed for them?
It's a big question that we have, because when anyone comes into a category and does things differently, it requires education around that product. So the reason we're able to, first off, to answer it, it's education. So it's education through all of our consumer touch points, being Amazon with A+ content. QVC is on our list. QVC is going to offer us 10 minutes to be able to talk about it. So it's hitting education points across all of those markers. And it's also the reason why we're able to be so generally useful to most people's skin is because of the very, very specific and specialized knowledge that goes into making these formulas. So it's also hitting on this specialized knowledge that truly not a lot of people have about how to properly formulate with active ingredients with using Korean herbal medicine. So you're right. It's an education play.
Yeah, just one thing, maybe more on the device side here on this one is,
Yeah, tell
while
me.
the specialized knowledge is absolutely key for you guys, I don't think it's going to market well because people will tune out at that point. And it just speaking from my own personal experience, when you get in the technical side, right, of it and the rationale for it, I think you're going to need to think about how to overcome that objection beyond that. That it's valuable, but it's going to be a asterisk, I think.
Do you mean to
Important for
repeat it
you,
once?
but for marketing.
Yeah, no, you know, it's well, for me, because I need to market the product as well, but usually people ask how specifically it can auto adapt for all skin types. So we tell them about the ingredients. We go into a deeper dive of how it does that. But I agree, it's not an easy sell, but once people get it and try the product, they're beyond in love. I mean, the reviews we have are great.
And will you do anything in marketing, like, again, like maybe putting product in their hands to get samples to consumers where they're going to try it and you'll ship it to them free or whatever, that kind of thing.
For sure. We sample right now. We with each order, we provide samples with most orders, and it ends up a lot of time that they end up buying it, or they'll send us a message saying, I love that toner, I'm going to buy it. So for sure, we're sampling. I mean, just tomorrow, well, last year we did an event with Diane von Furstenberg. We do a lot of in-person events. And so she held an all-day event at New York Meatpacking Store for us. And we passed out samples. Tomorrow I have a brand activation at the Well. So where we just launched, I'm in New York right now. So we do, you know, right now as much as possible, having one-on-one the conversations, passing out with orders.
Yeah, it's getting the order to begin with. Okay, thank you.
I will tell you, Mark, it was one of the big selling points for me. Again, I was on your side. I was like, no freaking way. Another freaking skincare brand. No.
I didn't say that. You said that.
I said that even. I believe that.
And I went to one of the events, actually went to multiple events, and she's such a hustler. I tried it. And then what happens is you try it, you see the adaptive nature of it, and then you end up getting it for everyone because it really does work for all skin types. And you don't believe it until you try it. It's pretty incredible.
And
my last question is, can you talk about why you went so extreme with with all of the certifications and things? Like, you didn't have to go all the way there, but you went like all the way.
Oh, well, I mean, I believe that that's expected right now of brands entering this space. It's also my mission, my personal mission, to provide the absolute cleanest product. I can't stand behind anything. My face shows everything. So when I say this product, I believe in this product, I 100% believe in it. So I only want to give humans the healthiest product for their body, and I only want to leave a light or no footprint on this planet for all of us and our future generations. It makes sense both mission-wise and acquisition-wise. It just makes sense to be a good human and set up business so that it succeeds.
Thank you. Good luck in your work. Appreciate your time.
I appreciate you.
Next up, we have Chathri. Chathri, are you there? Hello, hello. Are you calling in from Texas?
I am. Thanks for having me. Hello, everybody.
Oh, Chathri and I have known each other for many, many years, and this is your first foray into entrepreneurship. And when you told me you were doing this, I was like, that makes sense. And I'm so glad that you got randomly picked for the pitch day. So go for it.
Okay, so I'm going to share my screen, and here we go. Okay. As Laurel said, and I adore Laurel, and thank you for having me. A huge supporter of Fabric VC. Myself, I'm the CEO and co-founder of Excel Health. We are essentially disrupting the world of healthcare recruiting. For me, I look at healthcare as an industry that is ripe for disruption. But before I go into what we're solving and how we're solving for it, I'll just introduce myself and my founders. I hear someone else if they want to mute their phone. Myself, as I said, I'm the co-founder and CEO. My background is in SaaS. So e-commerce SaaS specifically. I spent over 15 years in really figuring out how to go from 0 to 1 with multiple applications in the Shopify space. So a couple of them I'll just mention. I was an early employee at Recharge Payments, which is based in Santa Monica. So I am from California, even though I live in Austin. And we built this company from 10 people to over 350 people, but really focused on subscriptions, the subscription space, and again, within the Shopify ecosystem. And for us, we grew it from just an idea to eventually growing it to having 15,000 customers, and eventually going through a Series A and Series B. And at the last time that we raised, it was at a $2.1 billion valuation. I was there for 5.5 years and ended as their chief operating officer, and really owning all of the go-to-market side, partnership, sales, customer success, and marketing. So a lot of fun. And from there, I went to Klaviyo. Klaviyo is an amazing company. They do email and SMS in the Shopify ecosystem as well. And for them, I was their head of technology partnerships. And I was there when they were well over 1,000 employees. So a little bit later stage, but that's why I went there. I had done the early stage. I wanted the experience in later stage. And I was there right before the IPO, and they IPO'd in September of last year. Some of you here on the call might have heard about that. Great company. The other folks who are not on the call today are my co-founders. Oz, who is our CTO, he and I worked together quite intimately at Recharge Payments. He was our VP of engineering. So he grew that engineering team from 16 engineers to over 150 product and eng team members. And then our third co-founder is Austin Ali, our SVP of growth. He is from healthcare. So this idea really came from Austin, who spent a lot of time as a physician recruiter. He was in-house at a hospital, a couple of hospitals actually in the LA area. You all might have heard of it. Adventist Health, who is their main base is in Roseville in California, and their main hospital is in Glendale, California. And he was the physician recruiter there, as well as the Oncology Institute. So for cancer, 50 hospital and clinic locations within California and other states focused on oncology. His problem that he had to solve was finding physicians. And what he ended up finding that it's actually quite hard to do. And eventually he ended up leaving to go to the recruiting agency side, and tried to essentially do what he was doing in-house and actually do it on the agency side, because frankly, it was more lucrative for him as an employee. And he learned a lot. He learned a lot along the way. And what we found, Oz and myself and Austin, was that it's actually a very archaic business model. The way it works is essentially you're looking for a needle in a haystack. And the reality is the supply of physicians today is actually really low. Number one, 60% of physicians right now are 60 years and above, meaning that they're going to retire quite soon. And what that means is that there's going to be a void of the supply side of providers, the physician side, working in hospitals. So that's number one, a huge issue. Number two, how they're hired is actually really inefficient, like I mentioned, in terms of how recruiters like Austin are finding these folks, and if they're even willing to take a call or even join a conversation regarding an open opportunity. So it's inefficient, the supply is low, and also even if they do get in contact with a physician, how they get hired and the point from conversation to getting their first day, onboarding call, that's very inefficient. It actually takes a really long time. Overall, just to zoom out and give a 30,000-foot view of the industry, it's quite large. When it comes to physician recruiting, and I didn't know this, like I said, I'm from e-commerce SaaS, I'm stepping into healthcare to really solve this problem. It's a huge industry. Overall, $10 billion is spent every year when it comes to recruiting, not just physicians, but nurses and other positions within a hospital. But then you boil it down to just physicians, which is the area that we're trying to solve for. That's actually half of the industry overall for recruiting. It's $5 billion. So for us, we see that ripe for disruption just in our first and second year alone. And just real quickly, why are we launching now? Frankly, I've been in SaaS for a very long time, as Laurel said, and right now I'm actually in a position where I'm ready. If you asked me 2 years ago, I probably wouldn't say I'm ready to start a company. Fast forward to 2024, I'm ready. I've learned a ton. I've learned from incredible leaders. I know how to scale. I know how to take a company from 0 to 1. And now we have a great idea. In addition to that, a lot of what we're building is actually based on AI and automation that did not exist 2 years ago when I was at Klaviyo. And third, I would say that hospitals in general actually very open and really ripe for using new technology in terms of, and you might have read about this, note taking for when you're seeing a patient. So there's several technologies already out there for note taking within an appointment, but beyond that, we're trying to solve for the workforce side of the hospital side and in terms of how they hire. So it's a great time to launch now. I don't think we would have been at the right time 2 years ago. So again, for folks who aren't from healthcare, what we're building, it's not a like a LinkedIn. We've gotten that a lot when chatting with folks. We're not a LinkedIn. We're also not a recruiting agency where Austin came from, where he's literally calling on the whim to different physicians. However, like I mentioned, it's a very lucrative industry. Companies like Comp Health, they make about $1 billion a year. Weatherby, $250 million. Locumtenens.com, which is hiring for temporary roles, $150 million, and so on and so forth. On the other side of the coin are marketplaces. So Aya Healthcare, LocumSmart, Healthy Careers, Practice Link, they are marketplaces, but they're mostly like a Indeed.com. They're posting a job and they're hoping that the physicians find and are interested in their roles. We are different. We're not a marketplace and we're not an agency. So essentially what we're trying to solve for is a couple things. One, when you do use a recruiting agency to hire for these types of roles, it's really expensive. I didn't know this either, but it's $25,000 to place a physician through some of these agencies, all the way up to $30,000, if not $35,000 for hard to hire roles. So that's per role. And frankly, that's a really high cost. And for me, when I see healthcare and when I say healthcare is broken, this is an area where I see an opportunity to take those dollars and put it back into patient care. That's why when folks ask me, why did you leave e-commerce? It's because I see a problem and I want to fix it. Healthcare, I can't solve the entire industry, but I could definitely maybe solve for a slice of it. So the cost is quite high. How folks get hired is also very cumbersome, like I mentioned. I'm not going to go through all the steps, but basically it's a post and pray approach. You really just hope that your physician finds the position online and applies and they're a great fit. But again, there's a lot of data that's missing. So what are we building? I'm going to go into that at this point in terms of how we're solving for this very archaic problem. Frankly, we're going to add a lot of automation and AI into how the archaic way was done. We're moving it into the future at Excel Health. So what we've built are Excel Health AI agents. So on the back end, we're actually solving for a lot of what Austin would do as a human recruiter. And we're actually doing a lot of the work on the back end. So what we are essentially building is a matching engine. So I think the best way to think about this is, for lack of better comparison, it's like a Tinder. So frankly, in terms of getting matched, in your personal life to your, maybe you're the best partner for what you're looking for, you're going to put a lot of your inputs in and you're going to get an output of matches that match your inputs. We see a lot of opportunity for physicians to put their inputs, their desired salary, the desired location where they're looking to be, and also lifestyle preferences. None of this data exists anywhere today. We want to be that database that has all this physician data to get them matched to the right opportunities at the right time. So we essentially created a matching engine to match providers to the right open roles. So with that, once they get matched, they're going to get notifications saying, hey, Dr. Johnson, you've been matched to, oh, am I already almost done? Okay. I'm at time. Okay. So
Maybe just tell us
essentially,
how much you're raising. That would be great.
sure. So we actually have finished our MVP and we are already in demo conversations with folks. So SaaS-based approach, like I was saying. We are raising 1.5 million. We are pre-revenue. At this point, we're basically at product, so we're not pre-product anymore. 1.5 million. We've already raised $1 million. So really looking for investors for that last tranche of 500K, and be excited to work with any partners who could be helpful in terms of strategic introductions, and really just great partners overall. So thank you for the time and great to meet everybody.
Thanks, Chatri. Appreciate it. All right. Questions. This is an interesting one. Totally different than how I've known you, Hysterical.
I know.
All right. So I'm going to ask the same question I asked in the last one, which is, how are you feeding the AI engine? Because again, I'm a Luddite when it comes to AI, and it is, of course, the most sexy conversation in every room right now.
Yeah. So for us, we're learning along the way. What we're doing right now is we're actually weighting certain parts of the information that we receive from physicians, and we're weighting the location, salary, and a few other parameters and matching it that way. And then what we're going to be doing is we're actually going to get feedback. So we expect physicians to pass on certain roles, and we're going to learn about that. So with that, we are going to know over time, maybe the salary is too low for the position that was offered by the employer. We're going to take that and inform the employer that the AI agent essentially says, you've had 89% rejection rate, and that's due to the salary being too low. So you should probably modify what you're actually
manual
offering.
right now.
Yes, right now, because we're pre-product, so we actually haven't launched yet. But essentially, the AI is going to learn over time what works, what doesn't work for the different roles. In addition to that, we're actually going to be using the AI agent to essentially replace a human recruiter as a co-pilot. I think that's the best way to think about the AI component of it, is it's a co-pilot for not just the physician side, but the employer side, the hospital employers as well. In addition to that, there's a lot more that I didn't get to go into, but essentially we have AI generated notes that summarize why a provider would be a good fit for the role. So there's a lot of components within the product itself that's driven by AI.
Got it. All right, Mark, you're up.
Okay, so I have a host of questions.
All right, I'm going to run to the restroom while you're doing that. So you've got the floor for a minute.
Okay, no worries.
1 minute, okay.
So I'm not clear around your profit model and how you're getting paid. Who's paying you?
Sure.
Is it the physician or is it the hirer?
Yeah, great question. On the slide, I didn't quite get to it, but we're a SaaS-based model. The employers are paying us on a SaaS-based fee. So a recurring revenue model, whereby they're paying $3K per month to have access to the data, which is essentially the physicians that are matching to their open roles.
Right, so that's good. At least you're charging the employer and not the physician, because if it was the other way around, I would think you were DOA. And then this is, you're taking a small piece of a recruiting market, turned to specific for the medical industry. Obviously, this is a huge industry overall for all different kinds of businesses. And how do you expect to be able to actually essentially compete with all of these major players in the recruiting? They're going to be doing the same thing, right? AI is here. You've already got it in place in a lot of recruiting places. You already, as you said, have matchmaking. I might choose something different than Tinder, maybe Match or something else next time. But how do you see really?
Well, the physicians are using Tinder in their personal lives.
Yeah,
they're not using
Match.com. I know, I'm teasing. But that was more me being humorous. Sorry.
Okay.
Trying to be anyway. How do you see really competing as this industry definitely goes more towards automation? You're already seeing recruiting companies struggling because there's less people oriented and less, and they're going to be investing in this space and leveraging AI. And so, and going back to the data piece, if you don't already have the data to feed the AI, then your AI model and algorithm is going to be pretty immature and take a while to grow and really be useful. So
yeah,
how do you address all those barriers?
It's a nascent industry overall. My co-founder has been in the industry for 10 years. Nothing like this exists up until February. I would say he was full-time at a recruiting agency at several different conferences, talking to several physician recruiters who are in-house. they're not using these types of tools. They're still using their archaic tools. No one has actually come out as the industry leader in terms of using AI in any way. So what we see is, frankly, a race to get to the best product to offer to these hospital employers. No one's really doing it right now. Second, I would say on the AI training side, yeah, you're right. It's going to take time, but someone has to do it. We want to be the people that win in this market. And third, I would say recruiting agencies are not run by technically focused individuals. And I would say that they're not really ripe for creating a solution that will take away market share like we will. We're coming from a technology industry background. No one else in the space, as we've seen, actually has that kind of experience. So we have the recruiting experience, we have the tech SaaS experience from building billion-dollar companies, and that's why we will win.
All right, Mark, I'm going to move on to Jenny. Is that okay? Do your questions answered?
Go for it. If I have more at the end, that's fine. Go for it.
Thanks, Mark. Jenny, go for it.
I'm curious, as you look at this, once you get it solidified in the physician market, are you looking at expanding to other markets, or are you solely focused on physicians and we'll deal with that later?
Yeah, it's a great question. Thank you, Jenny. So for us, we look at physicians as ripe for really growing our customer base in terms of the fact that physicians drive revenue at the hospital level. Every other physician, or every other position rather, nurses, radiology techs, they're a cost. Physicians drive revenue, everyone else is a cost. So for us, we want to focus on physicians, and there are over, 1.5 million active physicians in the United States right now. We want to get really, really good at matching the physicians in the next couple of years. And then and only then will we think about other roles within the hospital space. But that's what we want to focus on. In addition to that, there are other platforms that exist right now, more in a gig economy type of role, space, and how they're solving for the nurse side. And so for us, we, again, don't see a lot of players within the physician matching side. And so for us, we want to get really good at one thing, and then and only then will we move on to other roles.
Cool. Thank you.
Thank you.
Can you talk a little bit about the current raise? Is there someone leading it? Like what happened there? Because last time I talked to you, you were just starting. So that's amazing. Congrats.
Yeah, it moved quite fast. Thank you. Yeah, we've had a lead investor who frankly contributed towards the majority of the first million. And for the other 500K, that's where we're looking for, I would say, our third VC partner. So we have two main VC firms involved right now, and probably looking for, if not one would be great, if not maybe two who get involved for this final 500K. But I would say the theme that we're seeing from the folks who have been involved are they get the space and they understand the problem that we're trying to solve for. So that's really what we found that has really gelled with our co-founders and myself.
Would you say a majority, obviously you're building the tech side of it, the AI engine, et cetera, but would you say a majority of the rest of the money is going to be on building out the sales team? Because you've got to you are building both sides of you called it a database, but you kind of are building a double-sided marketplace, really.
Yes, you were right. You were right. You were absolutely right. And that's exactly what everyone else has said. Like, you're saying you're not a marketplace, but you're a marketplace. You're
Okay,
absolutely right.
Okay, just so we're clear.
So, yeah, the capital is going to go towards two things. One, which is the sales and marketing engine. So we have a few growth marketing tactics that we're thinking about for the physician side. Actually, just last night we were in Orlando talking with physicians at a residency conference, and we actually had multiple signups last night to join the platform. So it was great news. So sales and marketing. And second, on the engineering side, we are building fast, like I said, and so we need a few more engineers to get us to the next phase.
Well, if you need any help on the marketing side, I do know an agency that could support you. Just saying.
Yes, indeed.
Those are all my questions. Does anyone else have anything else that they would like to ask Chatri? Mark, go for it.
Yeah, so continuing a little bit on where you were, Laurel, is where do you see, I know your pre-revenue, where do you see your profitability and what it's going to take to get to revenue, and what do you see as your exit strategy in terms of who a future buyer would be?
Yeah, I mean, I'm not thinking about an exit right now. I want to make sure we grow the company to its best potential, to be honest. And then in terms of profitability, yeah, we have financials that we projected till 2027. Our EBITDA is looking really strong starting next year, again, with a lot of assumptions in terms of revenue. But essentially, we're looking at signing about 50 logos this year and about 2.5x that next year. But overall, we're looking at, between 85 to 90% margin starting next year. And so getting to profitability next year.
All right, we're just about out of time. And that's how you know you're talking to a SaaS person when they say, we're looking to sign up 50 logos. That's how you know you're talking to a SaaS girl. Chatri, thank you so much and congrats on your success today. That's really exciting.
Thank you.
All right, we've got our wild card that came in since we had someone that dropped out last minute. Eli or Ali, I don't know how to pronounce your name since we just met.
Eli.
Eli, are you there?
I'm here.
Fantastic. The floor is yours, buddy.
Thank you very much for the opportunity, and hello, everyone. Let's
Hi.
just share the...
Thank you for jumping in. We really appreciate it.
Of course, yeah, let me tell you more about Catch. So my name is Eli Farhad. I'm the founder and CEO. I worked in finance for 20 years. I became an identity theft victim in 2015. And that's how I started Catch, because I learned so much on what happens when you become a victim in identity fraud. So we've built Catch, which is a secure and private kind of like Face ID that works on any device, not just iPhones. So this is the big problem today. 80% of fraud globally uses stolen ID credentials. And for businesses, this is a strong pain point called credential management. It's costing them a lot of money and time. For the consumers, the friction of passwords or an MFA is destroying the value of authentication methods they're supposed to provide. And credentials are really loved by hackers. They use them to hack our accounts, our devices, and defraud us. So if we zoom in a little bit more, the problem for the enterprise financial institutions particularly is called credentials management. It's really painful and costly. Let's just go through over some numbers. 40% of help desk calls are related to password. It takes 2 to 3 minutes to verify a client's identity remotely. It costs $70 to reset a password and close to $3,000 to $4,000 per cyber spend on every employee annually. The industry as well as a whole is losing close to $56 billion every year just to fraud. Identity theft tripled in 3 years from 2018 to 2021. There are multiple markets that are going through this pain, like financial services, insurance services, healthcare, and obviously government agencies. So we built this identity we call Catch ID, which actually what it does, it replaces your passwords. Your palm becomes your password. There's no more credentials. With this new concept, we're able to provide security and privacy, frictionless verification that works on any device. And this is very important because we are eliminating the hardware element. We're using everyone's smartphone in their pocket. And that opens up a network effect for every business that uses Catch. But the secret sauce here is that our biocentric technology, which is a fancy way to say we're linking your identity to your hand, we're not linking it to the device. This technology is immune to the threats of compromised devices, compromised information like your social or your biometric, and fake generative AI or 3D biometric. And this is really important. If you ask anyone today in the cybersecurity space and ask them, hey, what's the biggest problem today in cybersecurity? They will tell you compromised devices. Because once your device is compromised, any kind of security stop you have on your device, like Face ID, multi-factor authentication, Google authentication, anything like that can be bypassed. So basically, the hacker will run the show. So when we replace traditional credentials with just a hand scan on any smart device, we are eliminating badges at hospitals, MFAs on consumer level, and businesses, QR codes that are used for ticketing and even like events. We're providing zero friction. It takes only 2 seconds versus minutes to verify an identity. And we're allowing you to authorize your information every time you need it. So this is really crucially important, because when I fell victim to identity fraud, this is how it happened. Someone was using my information, they called my bank, provided that information, and they were able to access my checking account. It's that easy. We make it easy to make business in America, but then this is the trade-off. And so when you authorize who can use your information, that's kind of like a new paradigm in security, in securing your identity. Every hand is unique, and you know, the beauty of the hand is that you just have to scan it. There's no password, no username. It takes 2 seconds, and you access any account you want, not just your bank account. Elderly can use this as well. It's really easy. I can't tell you how many conversations I had with the elderly where they just trying to juggle where is that, you know, passcode that was sent to their phone. So why are we better from device-based solution like Clear, Face ID, which was hacked already, Amazon One, at Whole Foods? Well, because first of all, we're removing the hardware barrier, which is a big cost when it comes to selling those technologies. For example, I had many conversations with engineers at Amazon One, and they told me every time they come up with a new hardware or a new generation, the deployment, the development, and the maintenance of these hardwares are increasing the bill on their pricing models, and they have to add it up at the end of the day. It's becoming really expensive for, I would say, small to medium businesses to adopt those technologies, which is everyone on the retail side. So that is a no-no and a non-starter for any kind of reliable biometric security that requires a hardware. Second of all, that convenience is really limited to where the device is available. So if it's not available, there's no convenience anymore. So this also makes it a no-no when it comes to the adoption of a hardware-based biometric system. And that also explains why they couldn't really gain traction over the years. I mean, Amazon One has been in the market for what? More than 4 years. Clear has been for maybe 7-8 years. And Face ID, obviously, you know, it's on our devices, which also proved to be hackable. So this is really where we're different. We are removing the hardware, providing much more competitive pricing for all businesses and access to all devices, which is really amazing. So why do we use the hand? And that is really instrumental here. The hand inherently is a voluntary biometric. So if you're walking down the streets, cameras are capturing you, your face is always providing that biometric signal. We call it passive biometric, while your hand can never be captured through a camera passively. It also does not discriminate against gender, race, or skin color. Things about AI, and people who know about AI know very well that when you have dark skin, AI struggles to find the parts on your face. The hand is different. Actually, even Black people have actually bright palm, which gives it an advantage, and so it doesn't discriminate against them. It is also a private biometric, which, you know, is not invasive like facial recognition, and is accepted and receptive by most religious or cultural groups. Catch added more security elements to make sure that you won't, you know, your security is unmatched. So we're able to detect if you're alive, if you're dead, if you're sober, if you're unaware or drunk. Of course, there are other biological markers that are part of our secret sauce, that are part also of our IP that we cannot really disclose here. Our IP attorney is really impressed with the technology. He considers it unique and will have a positive, significant impact in the cybersecurity space. So when it comes to competitors, the closest one that comes to us would be Amazon One. I'm sure you've been to a Whole Foods where you pay with your palm. The technology is really cool. I use it myself. I trust it. It's pretty good. The only thing is that it involves the hardware, and that hardware, technically speaking, has an infrared camera. So infrared cameras do not work under the sunlight or in an open environment in an outdoor setting when there's a lot of heat. So which makes it dysfunctional in a way, and only works in an indoor setup. That also gives us more advantage over their technology, to be honest, because it works on any smart device, anywhere, in daytime or nighttime. The market is the most important element too. It's growing at 17% compounded annual growth rate, and it stands at $80 billion in the United States and $240 billion globally. Those numbers are going to explode in the next 10 years, obviously, because of the emerging threats of AI. And this is also another element that people sometimes overlook. 20 years ago, scammers didn't have access to the latest technologies. Today, they have access to ChatGPT and the best AI models. They can actually use AI models from other countries and other sovereign nations. So they have access to all the technologies that we're trying to use to protect ourselves, which makes it really difficult to protect our identities and our devices. We're using webinars right now. We're engaging with a special focus group to connect with potential clients and customers, also investors. Our strategy is that we're providing free assessments and a money-back guarantee if savings are not achieved. Right now, we're building our MVP. We have several LOIs. I can talk about that in a while. So testimonials of hiring professionals. So we've done over 40 interviews with potential customers, and we've got really interesting feedback. So an analyst at Wells Fargo said that we're removing the pain of credential-based verification. The head of digital assets of IBM said that it's a great co-signing tool for transactions. So when we say about transactions here, we're talking about offline, on-premise, online, it doesn't matter. Actually, we're able to provide security on-premise better than in person. And because I worked in banks for years, and I know for a fact that checks, for example, is one of the biggest scams that happens on-premise at a bank. And we can really stop that with this technology. Our company was recognized by top-tier organizations like the FDIC, Visa, and the University of California, Riverside. We have, like I said earlier, traction, 4 LOIs.
Eli, you're out of time. If you could just wrap up, please. Thank you.
So yeah, it's a SaaS model, and that's how much we project to bring in the first 4 years in revenues. Strong team coming from prestigious organizations like IBM, Raytheon, Symantec, and HSBC. We're raising 500K. It's a pre-seed raise. And now actually we have also our crowdfunding campaign. It has been launched. We have gathered some traction right now. It's been out only 7 days after getting SEC approval. The vision is this: we want to build trust in a digital world, because if you can bring trust to that world, there's really an exponential growth and new way you can deal with this to get services and a lot of things done online instead of going in person, waste time and a lot of things that can protect the climate as well. So thank you for listening. I'm open for your questions.
Fantastic. Thank you for jumping in. And for those of you that just joined, Eli just jumped in because we had someone that dropped out. And I think you did a great job considering you had literally no warning that you were going to do this. So thank you for filling the spot. Very interesting product. We do live in a very scary world. So I think it's important that we have products like this to protect us. My question is, first of all, I thought it was really funny that you were like, oh, my IP attorney is really impressed with our tech. Well, you kind of pay him to do that. So I thought that was hilarious.
I know. I've been told that before, but he was like, came up, you know what? I'm really impressed with what you're building. I'm going to give you this title if it helps in any way for you to raise money. And it kind of helps,
very funny statement. I want to know, is this going to be standalone tech, or is the purpose here to sell this to like a big tech player in the space? Because it sounds like this would be really an acquisition play, no?
It could be an acquisition play, of course. It's our less likely scenario. We don't favor that scenario unless like it was really a sweet deal. But we're going to work with B2B customers, engage with their employees, because the biggest pain they're facing is the employees more than the end users, for example. And let me give you a quick example. MGM was hacked just a few months ago. Most of Vegas was frozen. It all happened because one of the employees at MGM had a compromised identity. Just think about that. And when your employees are compromised, hackers have access now to all the network inside because you're an employee. It's different than me being a customer at MGM being compromised. And so that's where we see the biggest pain is the customer. And we're engaging now with several customers to work with the employees first before even. And that's cool for us. It's even better because when we work with internal teams, we don't have to have all the certifications. We don't have to have all the things, that are required by regulations.
Right. Any other questions? Super deep tech. Mark, go for it.
So thank you for asking that question, Ashanti. I am a bit confused in terms of how this will work. So if we carry on with your selling it to a company that is going to use it, let's see, initially for an internal focus with their employees. Some companies have single sign-on approaches currently where they have one password for all their applications. Other companies have distinct passwords still. You have debates on which is better. Set that aside. Is it that you're going to now go into a company and say, all right, eliminate all your passwords, buy our software, and people will use their personal device to log in with their hand to all of their business tools? Or help me understand how it's really going to work, because I don't get it yet.
The first early adopter would be a business, and we want to first engage with their employees. So we want to onboard them every morning or whenever they need to access their workstations through a camera. It can be your smartphone, it can be your laptop, it can be any desktop computer.
So they will get access to their corporate tools.
Correct.
Through their hand on a camera on a device, instead of logging in with a password.
Correct, because that password is such a pain for them. It's costing them so much money in terms of labor. Also, the employees themselves, they have to change those passwords every now and then. They want
So will you use that so when I log into my computer every day, I'm putting in a password or a PIN code or whatever, you're gonna have this app overlay on that laptop or whatever so that they use their hand first to log in. So you've got to get in their startup.
You just install our software essentially, yes.
It's software, not hardware, correct?
No hardware, yeah, just
Well,
software.
you need hardware, because otherwise you got to put your hand on something. So hardware is required somewhere.
The hardware, you have it at home. It can be your smartphone, it can be your laptop, it can be any device.
At a company, they're going to restrict normally to the business only devices, so it's going to have to be.
They can use the devices that they're using today. Like they don't have to buy additional devices.
Yeah, I guess I'm confused on that as well, Mark, because like your hand, if it's just your palm print, is that what you're saying? It's just the
Correct.
center part?
Correct.
Yeah. I don't.
All we need essentially is a camera and your hand. That's what we need.
And a screen.
Okay.
But no, you don't need the screen. The screen is just for you, like as a guidance.
If I'm doing a video conference, I can just put my hand up to the camera.
100%.
Good to go.
And you're good to go. You're in.
Got it. I think maybe we need a little bit more clarity on the messaging around that. I think, again, you're super early, but if we're a little confused about how that's messaged in terms of how it's actually delivered, maybe a little more clarity around that.
And I think they'll have to work through that dynamic as well of just companies coming in. Sorry, Laura.
Totally.
Not mine.
Totally. Any other questions? Fantastic. Who showed up today? I'm going to share my screen. Here are our next pitch days. So mark your calendars. We've got 2 more. I can't believe we're like going into the later half of the year. So make sure you mark your calendars. We, of course, will send you invites for these as well. Thank you for showing up and showing out. It is so important that you provide feedback and show up for these amazing founders. And my takeaway always to you is write the freaking check. It doesn't matter if it's $1,000, $10,000, $100,000. Getting out there, being a part of this ecosystem is so critically important. And I personally thank you, because I couldn't do the work that I do without the support of each and every one of you. So go forth, be fabulous, and make change possible. Have a great night, everyone. Bye.